Hello, this is Jordan, and this is your precious metals market update. Today is Sunday, December 4th, 2016. Thank you for joining me today. And it looks like the precious metals sector is about to have a rebound, call it a relief rally, an oversold bounce. And starting off, we're taking a look at the weekly candle chart of gold. This chart also includes the equivalent of the 20 and 40 month moving averages, which are very important for gold. And at the bottom, we have the net speculative position as a percent of open interest. And that has come down to 41%. Now, the looking at the nominal figures at the peak or around the peak, speculators were long about 350,000 contracts. That's come down to 167,000, and open interest has also come down significantly. I believe it has come down from roughly 650,000 contracts down to about 400,000 contracts. So a lot of cutting of speculative contracts, and open interest has come down considerably. As a percentage, the net spec position hasn't come down that month. Now, with respect to the COT, I mean, everyone makes a big deal out of it whenever it looks like there's an extreme. For me, it's really the price action and the fundamentals of the market that are more important than the COT, which is really a lagging indicator. And the problem for gold is not the COT. The problem is that gold has lost its important moving averages. It's lost important support in the low 1200s, and that is the biggest problem. And then you can say that there's still room for speculators to sell more positions. If gold had held above 1250 and rallied up to that resistance at 1375, the COT would not be as much of a problem. So that is the biggest issue for gold, is the negative fundamental development, which I discussed in another video. I believe is going to be temporary, but it looks like it's going to last here over at least the medium term. Now, getting back to the chart, we can see here that there is some support around 1160, 1155. Also, if you look at a monthly chart, you can see around 1150 is an important area. So 1180, 1200, very significant, but also there's support around 1150 to 1160. As you can see, it marked lows at the end of 2014, early 2015. Then it was resistance the summer of 2015. So, in gold, the weekly candle there is somewhat of a hammer. It's enough of a hammer where we can say it's bullish in the short term. So gold closed at 1178, traded as low as 1162. I'm looking for a rally up to at least 1230. Now the 40-month moving average is at about 1229. Let's just round that up to 1230. And then there's very strong resistance right around 1250. So I would not be surprised to see gold get up to 1250, but 1230 is really the minimum where I think it has to get. Don't be fooled. I mean, you'll probably see it go above 1210, the key level that we lost, but that really wouldn't fool me. I mean, gold could even climb all the way to about 1270 and would still be in a downtrend. So we're set up here for a good rally in the short term, but beyond that, the technicals here are very, very troubling, and I really can't make a case for gold not coming down and retesting 1050, maybe going a little bit lower than that. And looking at the big picture here are gold's longest bear markets. Now, in terms of price, some of these bears ended a lot sooner. But as far as time, we're really looking for how long did the bear market go until a true bull market really started, a multi-year bull market. And here we show the 87 to 93 bear, 96 to 2001, that was the double bottom, and then the 1980 to 85 bear. After those, I mean, of course, after 2001, we had a fantastic bull market. After 93 and after 85, gold did have about a 3-year bull market in both instances. And after the 80 to 85 one, it rallied about 80%. Not as much of a big gain there in the mid 90s, but nevertheless, gold is particularly in the stocks and the juniors. There was a fantastic bull market there around the mid 90s. So as we can see here, the current bear market is in black, and of course, I was showing the bull analog charts in recent months and in recent weeks, noted we went too far off course for it to remain a bull market. Interestingly, right around this time is when the other three longest bears ended. That doesn't mean that this bear market has to end right now, but that tells me I don't see this bear market lasting that much longer. And also, when you look at these other three bears, note that they really did not go that much lower than the low that they made before having a big bounce. Now, the one exception is the 87 to 93. There was a big bounce there. If you look, you can see it's kind of at the end of 2013, early 2014, based on the scale. But I looked, and gold went about 8 or 9% lower than that low. So what's 8 or 9% below the weekly low at 1050? Um, that's something in, I guess that would be somewhat scary. That would be in the mid 900s, but I'm really looking at the strongest targets. Would be 1050, 1000, and then 970. Those are the strongest targets as far as a confluence of support. But if you look at, um, of course, the 96 to 2001 bear, it had a big bounce in I believe 1999. Then it came back down and did not. It basically made a double bottom. The 80 to 85 bear, it had a big bounce in 82, as you can see there, did not make much of a new low. So based on that, based on what we already know, it's possible for this bear market to come down to that 970 target. But I mean, people saying that we're going to come, it's going to go to 800 or 700, just throw that out the window. It's ridiculous. It really doesn't make any sense based on a historical study of the market. So that's what I'm looking at as far as the analog. Now let's get back to the current technicals on the sector, and specifically the stocks. These are daily candle charts with the 50-day moving average there in blue. And we also threw in the Fibonacci retracements here. And I guess there's too many lines on the chart, but let's start and look at GDX. Did a good job of holding 20. We actually bought a position in JNUG, I believe on Wednesday. And the reason for that was the miners just continued to hold their support, even though gold had traded down all the way to, I think, 1162. Gold, the miners first bottomed when gold was around 1220, 1223-ish. So the miners had gone down since November 14th. Excuse me, gold had declined since then as much as $60 an ounce, yet the miners did not make a new low. So tremendous relative strength for the miners, and that, again, bodes really well for the sector in the short term. And Friday, the strong gains we had in the miners, that could be the start of a relief rally here. And our targets all along have been GDX 2350 and GDX J39. Now, if we look at the retracements, it's possible that GDX could possibly it rallies to 24 or even 25. Looking at GDXJ, I mean the 50%, the 38% retracement is 40 and a half, about a point above our target at 39. Now the really, really strong support, as you can see, is in the thick red, and you can see that's right around the 50% retracement. So it's even possible that the miners GDX could pop up to as high as 25, maybe a little bit higher. With respect to GDXJ, it's possible it could pop to, we mentioned 38% retracement at 40.55 and maybe a little bit higher to 42. Now, what would make me get even more bullish on the miners medium term? We would need to see a weekly close above those thick red horizontal lines, which are right at about 43 for GDXJ and just below 26 for GDX. Those are right very close to the, you see the two red arrows there in the first half of November. I mean, a weekly close above that line, that would be very bullish. I don't think it's going to happen. Again, I think we're at least going to see 2350 in GDX, 39 in GDXJ. But it's possible they could rally a little bit further and get a little bit closer to that red line and those two arrows. The relative strength in the miners has been fantastic. As I said, gold down $60. Miners didn't make a new low. Uh, I do think that while it is possible gold could make a new low, I don't see miners making a new low. for various reasons. I mean, they were completely blown out, longest and worst bear market ever, cheapest market in 90 years. Plus, you had a massive move higher, so I just don't see enough sellers to drive these stocks down to their January lows. I mean, it's possible they could come close and retest, but I really don't see it going much further than that. But it's going to be very interesting to watch the miners in the next couple months, assuming, let's say in January, gold starts to turn down again. I do think the bounce we're going to get is going to go into late December or into early January. So again, it'll be interesting to see what happens to the miners if and when gold turns down after this rally. Are they going to continue to hold up, or are they just going to fall apart like gold? I don't see them completely falling apart, but definitely given my view on gold, I think the miners are going to go lower. And so I don't think you have to be careful about buying and holding. I wouldn't be in that mode until we see gold go below 1100, 1050 ish. But nevertheless, as I said, it's going to be very interesting to see, will the miners start holding up well when gold gets below 1100? Who knows? Maybe that'll happen end of January, February. Uh, that's something I'm going to be watching with a keen eye, because if we see miners holding up really well uh, when gold's getting very oversold and gold's coming down to 1080, 1050, 1000, that'll be a sign that gold is probably going to bottom soon. But again, that's a couple months. I'm speculating about a couple months into the future. Uh, that is obviously subject to change. But that's how I see it. Short term bullish here, medium term still bearish. You can follow all of my work at thedailygold.com. Opt in for my free newsletter there. You can get my free weekly update every Sunday. And also in that free update, I include my most recent thoughts on the sector and some snippets from my premium update, which I published the day before. Thank you so much for listening and watching to this video, and I look forward to publishing another video update for you in the next week or two. Thanks again.